Wow, I think there was some relief on the closing bell today because at one point the stock market was in negative territory. In fact, it looked like a major sell-off. However, that wasn't the story of the day. The story of the day was a huge reversal happened sometime around midday with the market closing in positive territory. So during the course of today's trading, there was a positive swing of over 1,000 points. And that is certainly good news when we've had a topsy-turvy and volatile market, really, for the first quarter of 2025. Well, as we know, spring is a time to clean things up and get things in order. Think of spring cleaning. We try to get all the dirt and grime from the winter off. And it's also a good time to sort of get your financial house in good order, tidy things up, take a look at things, make sure you're still going in the right direction.
Yes. Principal and Senior Financial Advisor for Signal Tree Financial Partners, Elizabeth Scheiderer, is here with some expert advice. Thank you so much for being here. It's really important, I think, at this point for everybody to hear your voice about what we should do, because there has been a lot of volatility. But first and foremost, how do we know that we can feel like we're getting some organization in this chaos?
Yeah, well, today's market's a great example of how fear and greed are still a big part of the market and how it swings. And starting to get organized and doing the spring cleaning right now is a great opportunity to take that emotion out, set it to the side, and focus at what's at hand. So first step is to know exactly where you stand, whether the balance is up from yesterday or down from yesterday. We need to write your current assets. What do you own? What's in your savings account? What's in your work retirement plan? And then, of course, think about the debts that you have. Do you have some bad credit card debt that's creeping up there? How about your mortgage? Where's that rate at? Is it adjusting here soon? Really getting organized is step one when it comes to taking emotions out of the market.
One thing that I always hear folks in your profession say is don't look at your 401k every day because there are so many crazy swings. The temptation is great. You want to know where you stand. I can't help but look.
Yeah, every day.
Oh, I'm on it. I'm looking every day, and I'm constantly thinking, should I change course? Should I maybe change from one sector to? I know energy is always volatile and big. Are there broad sweeping recommendations that you make to folks that are investing? Things that maybe they were in recently, but they should be out of, or things that they're not in currently that they should be?
Yeah, and so what we're seeing a lot right now with the stock market and people with investing, and you're closer to retirement than you were yesterday, let's hope, every time you look at it. And so this idea too of a lot of investors right now have been hesitant about bonds. The last few years in the bonds market, as the Fed's been raising those interest rates and then now lowering those interest rates just a little, the bond market has sometimes been just as volatile as the stock market. Yeah. So friendly reminder that bonds can be your friend. They're often less volatile than stocks and can give you a good ballast to the volatility we're seeing in those sectors you mentioned.
It's a crazy time, for sure.
It is a very different time, and keeping those emotions out of it, staying diversified, all your eggs not in one basket still holds true.
All right, very good.
It's taking the emotion out of it that's probably the hardest thing. You've probably talked people off ledges, so I know you know.
Yes.
Elizabeth Scheiderer, thank you so much.
Oh, my pleasure.
We really value your insight here.